Vwap trading strategy. One of the best day trading indicators that you should be aware of. And I'm going to give you a little extra secret sauce. Hang in there for about 3 minutes, and we'll get to the secret sauce. First of all, I'm not going to give a lot of detail on what it is. You can look that up. But real quickly, for those of you who don't know, it stands for volume weighted average price. So it is calculating the price and the volume. And it's providing a line. In this case, I've got a black line here, and that is the volume weighted average price. And it starts every day. So this is a day trading indicator. So here's the first bar of the day. I'm using a 1 minute chart here intentionally so we can really break down where we see that. So at the beginning of the day, it's always going to start at a brand new spot. So it's going to start with the new candle, the first candle of the day. And then we're going to get price above it, price below it, price above it, price below it. So the general reading is that when price is above the VWAP, then we are overbought, so to say. You're paying more than other people did. Let's put it that way. That's probably a good way of understanding it. And if you buy below the VWAP line, then you're paying a lower price than the majority of shares traded. That's actually a more accurate way of saying it than most people, because volume does not equate to people. All right, so now, why is that important? Well, institutions use this very heavily, actually. And so if you want to be aware of what institutions are doing, they have to bring in a lot of money. And they can't trade as precisely as people who have smaller accounts. And so they're constantly trying to get their clients basically an average of the VWAP to get them a fair price. So now when you look at it, this is, some people will say, oh, you should, buy when it crosses above the VWAP, sell when it crosses below the VWAP. I don't like that strategy. That is not the strategy that I use. So let me show you what I use here. And we're going to bring this puppy up. And you can see this is the indicator on TradingView that we have. Right? It's not my indicator, by the way. It's a standard indicator. I believe it's publicly available. And so now we're going to use VWAP upper and lower lines. So what these are, this is the secret sauce that I was mentioning before. And we're going to use 2 standard deviations. And then click OK. So now you can see it's added 2 more lines. The green line above is 2 standard deviations above the VWAP, and the red is 2 standard deviations below it. So ideally, again, what the institutions are looking to do is over the course of the day, because remember, this is really primarily a day trading indicator, is they're trying to average a price around the VWAP. And so when we get 2 standard deviations away, that's when I'm looking to buy. I don't want to wait for it to cross back above the VWAP. I want to buy it way down here. All right, now, this isn't going to give you a ton of signals every day. And it's not a trending indicator. Remember, it's kind of a reversion to the mean type of dynamic as opposed to a trend indicator. And so we get one trade there, and there's nothing. And then we get another trade here. And I like it. I love it. Even if it goes above the 2 standard deviations, then that's even better. And then you see we come right back down to it. And look at that. At the end of the day, where do we end up? Price ends up right at the VWAP. Doesn't always do that, by the way. Not going to try to tell you that it does, because it doesn't. But again, that is not too surprising. So if we don't want to buy way above the volume weighted average price. We want to buy below it and wait for it to come back to it. And then we want to short way above it and wait for it to come back down to it. Now, here's another tip, and I'm actually going to do a 2-parter on this. I'm going to do a part 2, because there's 2 situations where you really do not want to trade the VWAP, but I'm going to give you a little bit of a little extra secret sauce here on this video. And then we'll do part 2, which will be coming out within about 72 hours. So during the open, VWAP is not as helpful, I found. So as you can see, and it makes sense, right? The market it starts here. That's the open of the day. And then we get a lot of volatility up and down. Now, the first thing you want to notice is 2 standard deviations. It's not very far away from where the open is. So our open is here. and 2 standard deviations up is there, and 2 standard deviations down is there. The longer that price goes, the further the standard deviations get apart. And so they become more significant in the sense that it's becoming more extreme. And that's what this technique that I'm teaching about today is. It's about treating the extremes back to the norm. And so early, the first, 30 minutes or so, 15 minutes, 30 minutes, whatever, we don't have those enough numbers, enough calculations, enough price data to really have a good sense of the 2 standard deviations of what is going to be normal for the day. So this is not something that I trade at the open. I would normally wait at least about a half hour. And in this case, you can even see that. So it goes way up, it comes way back down, it goes back up, comes down. Then we get, a very long bar there, bar here, very chaotic market. Okay, now here's where I would start to say, and this stays around 45 minutes after the open. Okay, now let's start using this technique. Now there's other techniques you can use, but I'm not going to be interested in using Vwap until after this time, when we're looking for the market to establish some direction, because up until this time, the market has not established any real serious direction. It's just been very volatile, making lows, highs, then it goes back down, takes out this low, and then it goes back out and takes out that high. So a lot of volatility, but no clear direction, no clear trend, in other words. Of course, the other thing that Vwap will not do is it will not tell you when to enter the market. It just tells you when you get beyond a statistical norm, 2 standard deviations in this case, like the old bell curve that we're all familiar with. So if you'd like to get my free market timing indicator, this is my scalpel tool that I use, and I give it to all my viewers for free. You can get it at indicatorwebinar.com. That's the website, because I actually used to give it away as a free webinar. But now I've recorded it because a lot of people said, hey, I can't make it to the webinar. Can you just record it so I can watch it whenever I want? And I said, sure. So now it's out there, it's recorded, and you can go view it whenever you want. Again, there's no charge for the webinar. The indicator is actually a common indicator that is on most platforms, but it's modified. I show you how to modify it and specifically how to trade it. In fact, this indicator is so good, I use it at every single trade I take. It is my entry indicator to enter with precision. So Vwap is more a broad stroke. Again, when are we getting to the edges of the bell curve? But to know the accuracy, the precision as to when I enter, that's where my timing indicator comes in. So go get it. My gift to you.